Moving average crossovers are a very common strategy picked up by beginners. However, I'm going to show you why they're not effective, how best to use moving averages as a trading tool, and how I personally use moving averages as part of my own trading strategy. So first of all, a very quick explanation as to what moving averages are. As the name suggests, it is the average price over the number of candles that you have selected. So for example, the moving average 9 is the average price of the previous 9 candles. The moving average 21 is the average price of the last 21 candles, etc., based on whatever time frame you are on. So let's start by taking a look at some common moving average combinations that people use. So at the moment on the screen in front of me, I've got the moving average 50, 100, and 200, and they're actually in that order. So 50 is at the top, 100 is in the middle, and the 200 is at the bottom. And that would indicate a bullish trend, because when a lower moving average crosses above a higher moving average, then you're in a bullish trend. When a lower moving average crosses below a higher moving average, you are usually in a bearish trend. So let's take a look at some past data and see how these moving average crosses have performed. So let's start with the current trend we are in. And as you can see, the last time we had a crossover of these moving averages was the 50 over the 100 back on the 23rd of October. And that would have got you into a long at about 33k. Now, granted, we are at 63k, so almost 2x up from that point. However, it wouldn't have been that great of an entry. As we know, we bottomed on BTC at around 15k, so you're already getting in after BTC has doubled, and you're also getting in way above the moving average as well. And something you'll see quite frequently in this video is how common it is for price to actually snap back and return to that moving average over time as well. So actually, you're better off trying to get in as close to the moving averages as possible, but I'll get onto that a little bit later on. Also, whilst this looks great, it is only one piece of information and data. If we actually go back and take a look at the rest of the crosses, it actually becomes a lot more difficult to find decent entries and exits, especially if we take a look at the previous cycle. So if we just take a look at all the crosses that occurred in this section here, so from around April 2021 to about April 2022, you can see that the crosses appear very, very late. So say you were in this trend back here. So say you managed to jump on this cross of the moving average all the way back here at May 2020. Yes, you are in a fantastic trend there. However, if you take a look at if you were using the moving averages when to tell you to get out, the first cross you get was the 50 over the 100. And that was around May 2021, and literally almost right at the bottom. You can see the cross occurred here on the 28th of May when price was around 34k, and we bottomed at around 28. So really not a good exit, especially if you're using it for shorts as well. You're shorting far too late and you're getting out of the market way too late. Bearing in mind, we topped out about 64, and this moving average is crossing at around, what, 34, 35, 36. Okay, again, the next moving average crossover is the 200 over the, the 50 over the 200. And this occurred right at the very bottom, as you can see, one candle up from the bottom, around 32k. So again, far too late to be getting out of the market, far too late to be shorting. In terms of a bullish crossover, the first one you get here is all the way up at 47k, bearing in mind we bottomed out at 30k. And then the next one is slightly higher up here at around, what's this price? Around 49.50k. So again, very late entry and exits on these crossovers. They happen again here, a crossover. We top out at 69k. The first crossover is on the 22nd of December 2021, and there's at 52k. And then we get another crossover here at around 41k, again very close to a bottom. And then finally the last crossover we get is here on the 24th of or 25th of January 2022, and that is literally right at the bottom here, down at 36k. So as you can see, not really that great for entries and exits. And even if we just use what is commonly referred to as the golden or death cross, so that is the 50 over the 200. So if we just get rid of the 100 and leave the 50 and the 200, again, we go back and take a look at when we first got the golden cross. So this was back here in May 2020, and you're getting in at around just under 10k. Now, granted, would have been a fantastic entry, bearing in mind where we went to. However, the bottom was down here at 4k. So you're already about, what, 150% up from that point before you've even entered. And then you're holding on, and you don't get an exit signal in terms of a cross until, as we highlighted earlier, the 23rd of June 2021, which is literally right at the bottom of this dip down here at 30k. So you'd have got out right at the bottom, and then you wouldn't have got back in again until the next crossover, which was the 13th of August 2021 at 47k. So that's a huge difference in terms of when you'd have got out and when you'd have got back, and you'd missed out on a huge amount of gains, lost a lot of profits from holding from 64k all the way down to 30k, and then getting in way too late back at 47 instead of just staying in. So the golden cross and the death cross, better for investing, but even then still very, very lagging. So now let's take a look at a pairing that is more commonly used for shorter term trading, which would be the 9 and the 21. So still on Bitcoin on the daily time frame, however, we've now got two different moving averages on our chart. We've now got the moving average 9 and 21. So as you can imagine, smaller moving average numbers means you're going to get more frequent crossovers. So this is more built towards trading, whereas the 50, 100 and 200 are more used in investing. So let's take a look at the performance of these two moving average crossovers. Let's start by looking at the most recent trend. So the most recent bullish crossover we got was back here at the beginning of February, when price was around 42, 43k. And the most recent bearish crossover was not that long ago, about 13th of April, where if we take a look at the bottom of the candle, price was about 64k. So not a bad trade, that one. However, let's get more into the weeds and take a look at a bit more data. So if we scroll back and take a look through some of these crossovers, you can see that, as we were talking about before, some of them occur very, very late, and you also get a lot of fake out. So if we take a look at this period here, as you can see, very choppy. We get a crossover, a bullish crossover here, where price was about, if we go from the top of the candle, 22.4k, only goes up a little bit more, up to about 24.2 before dropping back down, and you would have more than likely been stopped out on that. Very, very choppy. Again, this is a very late crossover. The crossover doesn't occur until the candle bottoms out about 20.8k, comes up a bit, then finally comes down. This is a nasty little fake out here. So price bottoms out around 18.5k. You don't get a crossover until right at the very peak of this move at 22.3k before it all comes crashing down again. Very choppy in this area here. You get a crossover and then it dumps back down. Then you get a crossover, it goes up a little bit, then another big drop down. And again, this crossover occurs when price is already down at 18.5k. So maybe you'd have got some sort of intraday short here on that final day of the dump on the 9th of November. However, price is already down quite a lot. And then again, you get these crosses over here, which is all very choppy until you finally do get a nice trend here. But again, it's all very, very choppy. Another late crossover here, so price bottoms out around 19.5k. You don't get the crossover until 24.7, 24.8. So it's not to say that moving average crossovers can't produce good moves or be a good entry or exit signal all the time. There are sometimes occasions where they are very good. However, the problem that beginners have is that they use every crossover, or they enter every crossover as a trader, and that's how you're going to get chopped up or have very poor exit. And so whilst moving averages can be a very useful tool, they're not utilized very well, especially by beginners. So now let's take a look at what my 4 rules are for using moving averages. So these are my 4 rules for using moving averages and how I believe they should be used effectively. So I currently use the moving average 21, and these are the 4 rules I use. So I use it for trend confirmation. Now this is simply, what direction is the moving average going in? So obviously moving average going up would indicate a bullish trend, moving average going downwards would indicate a bearish trend. And more importantly, and this is something that beginners fail to utilize moving averages for, is when to not enter trade. When is it choppy? So if the moving average is just going sideways along with price action, that's usually a bad time to enter a trade, because that's when you're going to get chopped up. So you want to use that moving average to confirm, is price actually in a bullish or bearish trend, or is it in no trend? Secondly, soft support or resistance. So what do I mean by that? Basically, moving averages can be used as support and resistance, but it should be taken with a large pinch of salt and shouldn't be used as effectively as horizontal or even diagonal support and resistance lines. So it can be used for soft support and resistance. As you can see back here, back on the end of January, start of February, you can see that the moving average 21 was used as support by BTC on the daily time frame. And you can start to see that the moving average then starts to trend upwards from that. So trend confirmation, soft support, and also moving on to my next point, is it showing weakness or strength? So back to it being used as support or resistance, you can see that price is failing to break below the moving average 21 back here, which would show strength. However, more recent times, you can see that BTC has failed to break above the moving average 21, which would indicate weakness. So sometimes if you're not sure, are we in a bullish trend? Are we in a bearish trend? We've broken over maybe you've broken over a resistance level. However, if you're then failing to break over a particular moving average, then maybe that is actually showing weakness as opposed to strength. And then finally, and probably most importantly, in confluence with other indicators. So don't just use moving average crossovers or an individual moving average individually blindly in terms of using it as your only indicator for whether to enter or exit a trade. So use it in confluence with things like price action, support and resistance levels, maybe RSI divergences, or how I currently use it, using our very own Learning Crypto trend and momentum indicator. At the bottom of the screen, you can see the Learning Crypto trend and momentum indicator in action. So this was designed by one of our analysts, Anthony, to help us and our members identify trades. So the trend bar you can see at the top, green when we're in a bullish trend, red we're in a bearish trend, and more importantly, orange when we're not in a trend and in a chop zone. We've also got the RSI, and this indicator shows you when divergences are appearing as well. So really good, handy tool to use, and all the trades that we publish are on Discord. As you can see, this is our trading room. So this was a trade that I'm going to go through in a minute, which I put in the group this morning, which was an FTM short. We can also see the other analysts putting in their trades as well. And we've also got the trade success room where we put in all of our profitable trades. And as you can see, there are plenty of them. So if you're interested in joining our trading community, head to our website, learningcrypto.co.uk. We've got monthly and annual payment plans. You can have a big discount on the annual, and also if you check the comments below, there is a discount code on top of what you save here as well. So if we just want investing stuff, then that is the premium. If you want trading, then that is the Traders Lounge, and that actually comes with the trading indicator as well. We are working on a free version, which we are going to get out to you as soon as possible. We're just waiting on TradingView to sign it all off. But as I say, if you want to jump in the community, Discord access is free. If you want all the other chat rooms, that's premium. And if you want into the Traders Lounge, then that is this one here. So go check it out, learningcrypto.co.uk. But for now, let's show you this trading indicator in action and the live trade that I've taken on and the reasons why. So now on FTM on the 4-hour time frame, and I'm going to show you not only the reasons why I entered this current trade, but also some examples of how this trading indicator would have worked for previous examples as well. So if we take a look back in the past, my current trading strategy using this indicator tool and using it alongside the moving average is, for longs, I want to see the RSI above 50. I want to see a green trend bar on FTM or the asset itself versus USDT. I want to see a green trend bar on the BTC USDT bar. And I also want to see price above the moving average 21. And it also is a bonus if it's above a level of support. Obviously for shorts, it's the complete opposite. So I want to see RSI below 50, below red trend bars on both the asset itself and BTC, and below the moving average 21, and below a resistance level, or holding a resistance level as resistance. So let's take a look at some previous examples of how this would have worked in the past. So back here on the 1st of April, you can see price was above the moving average 21 for a little while. Then we got this drop below. We closed below it. The RSI closed below the 50 mark. We were in an orange trend coming from a red. C was still in the green. However, if you took the risk, it would have paid off. As you can see, a nice breakdown from there. In terms of a long, you can see an example here. So this was back on the 7th of April. Again, price got back above the moving average, came back. So as I talked about before, snapping back towards the moving average rather than jumping on when it's far away. Come back, held it as support, held the RSI 50 as support. We had green trend on the asset itself, green trend on BTC, and you can see that went on a nice little run. Back to short. So after that run, we broke back below the moving average 21, and once again, we snapped back to it. So again, not jumping in when it's too far away from the moving average, getting in right at the best risk reward when the price is retest the moving average, either as support or resistance. But again, not using that as the only reason to jump in. If we take a look at the trend bar, red trend bar on FTM, it was green on the BTC. However, we were also holding the RSI 50 as resistance and the moving average as resistance as well. So enough confluence there to jump into a short, and you can see that was a big short there. Finally, most recently, a little long here. So price holding the moving average 21 as support, holding the RSI 50 as support, green trend on the asset itself, green trend on BTC, and you see I had a nice little move up. So now the current trade that we're in, as you can see, the reason why I'm entering the trade, you can probably guess as I've just been through it. Below the moving average 21, as you can see. So what I talked about earlier about the trend showing weakness. So whilst admittedly the moving average is going more sideways, but is slightly going down, more importantly, you can see the price is really struggling to break above it as resistance. So it's showing weakness in the move. We're also not able to close over this 4-hour level of resistance at about 72 cents. Can't get over the moving average 21. We've got a red trend bar on the asset, red trend bar on BTC, and you can see we've rejected the RSI 50 on the RSI. So all signs showing weakness there. And of course, the other confluence I like to add, which I didn't mention earlier, was I like to see BTC also below the moving average 21 on the same time frame, which it currently is. So all signs at the moment point to a short. My TP is here at 67.8 cents, where I'm going to close 50% of the position, take some profit, move stop loss to break even, and then hopefully the trend plays out to come back down and attack these lows here, which if we go to the daily time frame is a big daily level, which I'm targeting down here at 61.5 cents. So it should work out. It might not, but the odds are well within our favor, and that's what trading is about. It's not about finding the perfect strategy, because there isn't one. It's about having a strategy where you're going to win more times than you're not, or the reward is worth the risk because the odds are in your favor. So I'll be back with another video showing you how this worked out later in the week. Hope you enjoyed the video. Please do like and subscribe if you found it useful, and drop in the comments below what you would like to see me do in a video next, whether it's candlestick patterns, RSI divergences, etc. But let us know. And as I said, go check out learningcrypto.co.uk if you want to join our trading community. But in the meantime, have a good week, and I'll see you on the next video.